What's going on, stackers? Welcome back to the channel. Today we have a lot of interesting info. Let's get right into it. Now, first off, I want to start with this article. Saudi Arabia officially joins Brics alliance. Following the expansion invitation offered during the 2023 annual summit, Saudi Arabia is officially set to join the Brics alliance. Indeed, South Africa's foreign minister Neil D. Pandor has confirmed that Saudi Arabia and the 4 other expansion countries have been officially included. Now we know that the world is moving away from the dollar, so this is just another indication. They are creating their own currency, a digital currency, and from what I heard, it's going to be backed by gold. Could the BRICS nations be using XRP? Let's jump into this article real quick. XRP, the rising prominence as BRICS nations shift away from the US dollar. In recent times, XRP, the 5th largest cryptocurrency globally, has experienced a surge in interest due to the decision of BRICS nations to explore alternative payment systems and move away from the US dollar. They know that the dollar just keeps on inflating and losing its worth, and I think they're tired of it.
I want you to really understand what I just told you, the ramifications of this. What I told you is there's an Axis and allied power. Argentina, Brazil, Mexico, Ukraine, Russia, the stands, of course, Saudi Arabia, I don't know about Yemen, Iran, India, China. Those are all part of an ally. Now, everybody's talking about gold. What would that, oil, what would that mean for oil? But I just told you it also affects the US dollar.
Exactly.
This will take the US dollar out of the world reserve currency, which people told me 10 years ago could never happen. It's going to happen soon. But more importantly, goods and services. Think about what happens if we take this part of the world out of production. Let's say there's a Cold War. When we had a Cold War with Russia, we didn't really need any stacking dolls, so we were pretty good. But now, if this is the Cold War and we don't trade with these guys, do you know how much your clothing is going to cost? How much a car will cost? Where are you going to get your chips for anything? Because Taiwan is the one that makes all of the sophisticated chips. This is going to change everything about your life, everything that you think you know about America.
Now we see how they're moving away from the dollar, and in the previous video, I was breaking down this article right here. Dubai's pioneering move, revolutionizing oil trade with XRP. Next up, I wanted to take note of this article right here. Dtcc issues new affirmation progress report and details post-trade best practices to achieve T+1. Now you might be asking, what is the Dtcc and what is T+1? The Dtcc is the Depository Trust and Clearing Corporation, a financial services company that provides clearing and settlement services for the financial markets. And as for the T+1, for example, if you sold shares of a stock on Tuesday, the transaction would settle on Thursday. Under the new T+1 settlement cycle, most security transactions will settle on the next business day following their transaction date. They're going to be moving all the transactions onto the blockchain. And lastly, I wanted to include this clip, which has Chainlink, Swift, and the Dtcc in it. Let's get into the clip.
Thank you for joining us for this panel. It's very exciting to have so many people from the capital markets that are actually pushing the limit of what's possible here with us. Jonathan, Stephen, and Victor, I want to thank you for being on this panel and sharing your insights with us. Thank you. Very excited to hear your views on DeFi and tokenization, a whole bunch of awesome topics. I think just to kick this off, we're going to begin talking about cross-chain. And in regards to that, just to set the stage, I'm very happy to announce that we are working on an initial proof of concept together with Swift on the use of CCIP. In the capital markets to enable communications and movement of tokens between a number of different institutions in a way that'll accelerate the adoption of DLT, blockchains, and benefit various institutions all over the capital markets. In that regard, I think we'll just start discussing cross-chain, and I'd be thrilled to hear Jonathan's views on the importance of cross-chain and how communication between chains and institutions in a multi-chain world could look and work.
Yeah, so thank you, Sergey, and thank you for the invite. Let me start maybe because I know not everybody is aware about SWIFT, but I will try to explain it very quickly. So SWIFT is a cooperative, is an international cooperative. We run perhaps the biggest network in financial services today for capital markets, for payments, for FX, for trade. We are headquartered in Belgium, although we have sort of operations everywhere. And we have around 11,000 banks that are connected to SWIFT today. They exchange financial information in the most secure, reliable, and scalable way. All right, so that's one, just to frame it that. The second piece is that the POC that we're doing, it's the end of a long story, right? I think 5 or 7 years ago was the first time SWIFT and Chainlink started working together. You were actually one of the first startups that we bet on. You won the startup challenge that we used to have a long time ago. And then even before blockchain was something that financial services had in their minds, I don't think at the time nobody was doing anything on blockchain, on financial services. SWIFT and Chainlink worked together on the first POC that we did on bond issuance and redemption. It was quite successful. And that was maybe the first steps of this sort of love story between SWIFT and Chainlink, which continues today. Now, why we want to continue to work together? I think there's 2 factors that I want to explain. So the first factor is there is undeniable interest from institutional investors into digital assets, whether these are stable coins, CBDCs, or anything that you can tokenize on capital market space. So that could be equities, bonds, or anything else. So those institutional investors, they want to have access to these assets at the same time that they have access to traditional assets. And that means that a asset manager, for example, wants to use the same custodian they use today, and those custodians probably wants to use the same sub-custodians to settle at the same infrastructures that they do today. And that, in theory, means that they want to use a network that can connect to all of these capabilities, and that's where SWIFT comes into play. So that's the first factor. You have institutional investors saying, hey, SWIFT, we want you to be the network to connect to that. Now, in reality, connecting to this network for digital asset doesn't mean connecting to new, same infrastructures. It means that you have to bridge the gap between these infrastructures that have been there for ages and all of these new blockchains that are going to provide these services, whether it's issuance, clearing, trading, settlement of tokenized assets. And there are going to be many of them. There's already a few of them. Some of them are private. Some of them are Ethereum-based. Some of them are in anything that you can, any fabric that you can imagine, right? So SWIFT doesn't always have the potential to go and try to connect to all of them, right? Because if we bet on 10 this year and those 10 disappear, then we are losing investment in that. And it's the same for the banks. So this is where CCIP comes into place, right? So it's the perfect example of if you have this interoperability network and you have SWIFT that is using this interoperability network, we connect to 11,000 banks. You connect today to 15 Chainlinks, to 15 blockchains, but you can connect to way more. That's the bet that we're putting on you guys, and we're trying to encourage you to do more. Then you have these 2 infrastructures that are secure, that are reliable, that are scalable, that can actually work so that you can buy an asset whatever you want and you can transact it in whatever country and serve institutions such as Bank of New York Mellon or Dtcc to actually do that cross-border. Does that make sense?
Yeah, thank you for that thoughtful explanation. I think that's right. I think people don't fully understand that SWIFT has the largest private key infrastructure in the whole banking industry. There is no reason to get rid of that private key infrastructure that already securely signs transactions to move around trillions of dollars in value. That's the existing integration that's extremely important around SWIFT, together with its messaging and routing and all the standards that it creates. All of those standards can simply have an addition made to them that says blockchain stuff. And then blockchain stuff needs to go somewhere. And instead of being very specific and going to hundreds of different chains, and having all the complexity of going to hundreds of chains baked in, you can just have blockchain stuff go to a global standard like CCIP that can distribute that to hundreds of these chains efficiently. So just like we don't want to build private key infrastructure for the 11,000 banks of the world, because that's already done, Swift doesn't necessarily want to build an integration with every single chain on the planet, because that's a body of work that we're focused on. So in that sense, I think it's a great collaboration and partnership, and it has been great working with them. Jonathan is right that it's been a long road together, working through a lot of things that we haven't always been able to be super public about. But this proof of concept is something we're going to be talking about more, and including more and more folks from the banking, capital markets, and institutional side of financial markets to make a big collaboration around. So thank you, Jonathan and Swift, for working with us. I really appreciate it.
Thanks.
I also missed a step when I introduced Jonathan, that I didn't give him a chance to fully explain what Swift was. So I'm just going to correct that with Stephen and Victor. Stephen, please tell us about the Dtcc and the immensely important role it plays in the global financial system. And then if you could share your views on how cross-chain and a multi-chain world would evolve from your point of view.
Sure, thanks, and great to be here. So Stephen Prosperi, I work at Dtcc, which is a post-trade market infrastructure provider. Our core business is providing clearance and settlement services for US securities markets, and post some pretty big numbers. I think last year we processed $2.4 quadrillion worth of securities. We often get asked if that's a real number, and it is in fact a real number. And it represents basically all broker-to-broker trades of equities, corporate debt, treasuries in the US markets. So naturally, we're very focused on blockchain and the opportunities it can present in the kind of industry where we sit in the industry. And kind of getting back to the question, cross-chain interoperability, we think it's very important. From day one of our exploration in this space, about 6 or so years now, we've kind of felt it important that there won't be one blockchain to rule them all. There will be multiple out there. The currencies will live across different chains, and other assets of value represented through tokens will live across different chains. So very similar to the role that we play in traditional markets of bringing all of those together, and similar to Swift in some ways in that nature, being connected to all the banks and broker-dealers to provide services, whether it's clearing services, settlement services, a lot of those same aspects, they'll transform, they'll look a little bit different, but fundamentally are very similar, I think, in a digital asset world. So in most of the initiatives that we take on, we look at how can this plug into multiple blockchains, and how can things coming down the pike like CCIP be used to help us kind of maintain that view, and again, to not build something that's already built, and to not have to stand up infrastructure to support 100 blockchains. If we can support one piece that can then plug into those 100 blockchains today, maybe 200 blockchains tomorrow.
So there we go, guys. Interoperability. That is the key. And one of the key functions of the XRPL is interoperability. I know there's a lot of XRP haters out there, and that's okay. Because over here, we're doing the research, and we know the facts. I'm not going to sweat it, baby. But there you go. You can see the Swift payment system, the DTCC, they're all moving to blockchain. Even our dollar is moving to the digital dollar. The whole world is working on central bank digital currencies. We are definitely in the right space to make many millions. It's on you to do the research and to figure out the winners. But anyways, guys, I hope you enjoyed the video today. I'll be back with another one tomorrow. Shout out to our sponsors, So Much Send. Check them out at SoMuchSend.com and at So Much Send on all platforms. Stay bullish and keep stacking.